Hi, how's it going, everyone? So Google, which is also known as Alphabet, which is the name of their parent company, released their first quarter's earning report of 2022. Now, one of the major takeaways is that Google missed on both their earnings and revenues, according to analysts. In a simplified earnings results, the earnings per share is $24.62, which is lower than the $25.91 expected. Their revenue is $68.01 billion, which is lower than the $68.11 billion that's expected. They had a major decline in the YouTube advertising revenue, which is $6.87 billion versus the $7.51 billion expected. Now, one of the bright side is that their YouTube cloud revenue is up from $5.82 billion versus the $5.76 billion expected. As a result of that, the Google stock is down by around 3.5% overnight. And overall, their stock is down from a high of almost $3,000 per share at the start of 2022 to around 2,300. So for a total loss of around 20%. So some may see this as a decline in the company. And I personally think this is a great opportunity to buy some Google stocks. And here's why. Now, first of all, Google's revenue came in at $68.01 billion. Now, this is a growth of 23% from the same quarter of last year. Now, let's get this straight. They have a revenue of $68 billion. So Google is literally still a money printing machine. How many trillion-dollar companies still enjoy a revenue growth of 23%? So 23% revenue growth is pretty amazing, even for a small, fast-growing company, let alone a trillion-dollar company. I mean, sure, that's less than the 34% growth from the first quarter of 2021 when everything was just slowly opening up. But then again, 20% growth is nothing to be laughed at. The YouTube ad revenue is less than expected, which makes sense due to all the competing social media platforms now, especially TikTok, which is starting to capture more and more of the social media market. And then you add Instagram stories to the mix, and then you end up with all these platforms competing for advertisers and the consumer's attention. Now, one segment that's gaining more traction is YouTube Shorts. Now, Shorts is pretty much a direct competitor to TikTok and Instagram Reels. The CEO of Google says that Shorts have around 30 billion daily views, which is around 4 times the number of short views from the year before. Now, short-form media is definitely the future, and how successful these YouTube Shorts become would heavily influence the direction of where YouTube is going. The Google's cloud revenue saw a 44% growth over last year. Now, even though it has a slower pace of growth compared to last quarter, where they enjoyed a very significant growth, Google Cloud includes apps like Gmail, like Google Docs, Google Sheets, Google Photos, Google Drive, Calendar, Meet, Notes, and many other apps that people are very familiar with. So as of the fourth quarter of 2021, Google Cloud has an estimated 9% of the total cloud market behind Microsoft Azure and Amazon AWS, which was the industry leader. Now, one other very important news is that their board of directors authorized a $70 billion stock buyback scheme. Now, stock buyback can sometimes be quite a controversial topic. So there are 2 main ways a company can pay back their shareholder. Now, one is through dividends, and the other is through company stock buyback. When a company pays out dividends, the shareholders will get taxed on those dividends, but they can receive the payouts more straight away. On the other hand, if a company chooses to buy back their own stock, it inflates the stock price of the company for the shareholders, but this doesn't get taxed straight away. So as a shareholder, you can almost passively enjoy the increase in stock price without having to do anything. So over the past few years, Google has spent more than $100 billion on their stock buybacks. Personally, I will be looking to purchase more Google stocks since they still have such a strong balance sheet and are essentially still a cash printing machine. Now, their growth may be slightly lower, but they're still extremely profitable company. If we look at the charts for Google, they are up around 100% in the 2 years since we hit the pandemic low back in around March, April of 2020, even after the most recent price drop. Now, personally, I use Google products every single day. They are a very innovative company that constantly bring out new products that makes everything easier. And I do plan on holding onto their stock for the long term. They're also one of the leaders in AI development, which only would become more and more important in the near future. All the way back in February, they have announced a 20-for-1 stock split for the Google stock, which means that at their current share price of around $2,300, with a 20-to-1 stock split, it would make their share price to just above $100. Now, they are planning on doing the stock split a little bit later on in the year, around July. And this may serve to get a lot of new investors that could potentially be buying Google stocks, because currently their share price is reasonably expensive at more than $2,000. But at a $100 price point, it may encourage a lot of newer investors to pick up some Google stocks maybe later in the year. If you're interested in investing in international stocks in companies such as Google or Amazon or other big companies, check out my other videos on which platform that you can use for investing. And I'll see you next time.